Hello traders, my name is Tomasz Wiśniewski. I'm a chief analyst in Alpari Research and Analysis. This is daily analytical report where I will show you what's going on the markets and we'll try to look for decent trading occasions. And obviously we have to start with the calendar. This is the calendar for today and for this week. As you can see, the most important events today are PMIs, which came mostly better than expectations. Especially big movement can be seen on British pound, where PMIs were 54 instead of 53. We had also interest rate decision in Australia, and you will see how this affected the Australian dollar. I will show you that later on the charts. Still to come, we do have PMIs from US, and in the meantime, somewhere in the meantime, we will have a GDT price index, which is important for the New Zealand dollar. As for tomorrow, we'll have GDP from Australia, so this week important for Australian dollar. Like we had interest rate decision, we have GDP on the Thursday overnight. We'll have data from the import-export, so trade balance. It is also a week where we're gonna have a trade balance from China and inflation from China, also influential data. We'll have GDP on Thursday. We'll have Bank of Canada governor speaking on Thursday, so also important data. PMIs we will have from Canada on Wednesday. So maybe not the busiest week on the record, but every day we'll have at least one important event. That being said, let me turn on the charts, and I will analyze most of the instruments live with you. I have only 3 instruments prepared before. This is British pound to Japanese yen, this is cable British pound to American dollar, and this American dollar to Swiss franc. Because I used that for the trading sniper video, which was recorded just recently, hour ago. Let me start with the British pound to Japanese yen because well, all those 3 setups have very good, interesting trading occasions. Let me start with British pound to Japanese yen. What we do have here is the price 2 weeks ago broke major horizontal supports. First, it started with the breakout of the lower line of the flag, then we broke to uptrend lines, then we broke to horizontal supports. After the breakout, the price declined sharply, like we got a 370 pips drop, which is a lot. After that, the correction time came. It was last week, and the price started to form a flag. And those red lines is a flag. Flag is a trend continuation pattern and should really end like this. That was a flag, ended with a drop. That is a flag, it can end up with a drop as well. But in a flag, in a correction, you either trade a breakout of the lower line of this formation, like here, or you trade the bounce from the resistance. Bounce from the resistance gives you more pips, but is less safe. A breakout of the lower line here is more safe, but gives you less pips. Because you would sell here and you would sell here. Like this is the example. As for now, that's not a good place to sell. because we are not on major resistances. First major resistance is here, second one is here, third one is here, fourth one is here. So actually the best place to sell would be the orange area, because that would be the place where we would have a combination of three resistances, downtrend line and two horizontal resistances. We will see how the situation will develop here. I will definitely look for a breakout of the lower line of this formation. So maybe we will not even get there. Maybe we'll stop somewhere there. But according to my strategy, I will open a short position once the price will break this lower line of the flag. As long as the price is inside of the flag, I cannot sell. Next one is British pound to American dollar, so popular cable, and I was very interested with the daily chart here, because look, the daily candle from yesterday was a beautiful shooting star. Okay, the thing is that shooting star was not a coincidence, because as you can see, it was bouncing from the horizontal resistance, which was a support on 21st of May and was a resistance on 24th of May. So we touched that, and also we are in the flag formation. Flag, as you know, is a trend continuation pattern, the same as here, so we should see the breakout of the lower line. What is very interesting here, that the resistance is a psychological barrier on 134, and the support here is 133. So currently we are locked inside of a 100 pips range. And I'm looking forward for the breakout. If we'll have a breakout of the lower line here, but I would wait for the breakout of the lower horizontal support, we'll have a sell signal. So to make that clear, like, breakout of the lower line here alone will not be a significant signal to sell. Breakout of this horizontal support will be a signal to sell, so I would wait for that. And here I would have to see the breakout of the upper line of this formation, upper line, upper horizontal resistance. Okay, this is my view on those instruments. And American dollar to Swiss franc, what do we have here is also a flag. But we also do have a double bottom formation here, bouncing from the 23.6. This pair is very close to triggering a buy signal, but there is no buy signal here yet. Buy signal will be triggered once the price will break the upper line of the flag and the horizontal resistance here. We do not see any of that. The price is not breaking the upper line of the flag. The price is not breaking the horizontal resistance, so there is no buy signal here yet. But once the price will break that, we will have the signal, because flag is a trend continuation pattern. In this case, trend is bullish, and double bottom is trend reversal pattern, but double bottom reverses this trend, this correction. So both of those formations, one is continuation pattern, one is reversal, but both of them are pointing north and are suggesting a further upswing. So those three instruments I had prepared for you. Now time for instruments that are going to be Australian dollar to Japanese yen. Let's start with that. First I need to check the... So how do I do this? First I check the daily chart. On daily we can see clear resistance here. Let's check the Fibos. Fibos are not respected, so there is no point in in having them. On a daily chart, you can see also inverse head and shoulder formation, which had a breakout of the neckline. That was the neckline, that was a false breakout, and the price declined. But unfortunately, we are in a long-term sideways trend, which will be visible better on H4. Here, 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 here. There is no clear trading signal here, unfortunately. So I'm not gonna be bothered about this situation on this chart. American dollar to Australian dollar. That's a nice downtrend line here. Go to H4. Yes, that's a very nice downtrend line. So then we have a reaction here. There is a horizontal support here and a resistance here. Okay. So, in general, I would go short. But there is only one thing that is bothering me, is this flag. This flag is a trend continuation pattern. Again, trend here is bullish. Here is bullish. So it may suggest another test of this resistance. So that's why I'm gonna wait. Because we may have a breakout, another test, and a drop. Let me see this maybe. Yes, this will be more appropriate, I guess. Let's change colors. The safest way would be to wait for the breakout of the green line, but for you it's probably too late. You would love to see some action before that. And well, I would wait for the breakout of the upper line of the flag, another test here, and another drop. If I would have this, I would be more than happy, and I would go with a short position, because on a daily chart, this bounce is not convincing, unfortunately. And depending from the highs that you will take, you can take those highs, and then we are above the uptrend line. So that creates this chance of a bounce from here and a breakout. So we'll see. The situation is definitely interesting. So I'm leaving this chart here. Price closing above the green area red area will be definitely a positive sign and a sign of a long-term reversal. Swiss franc, Japanese yen is our next instrument. Horizontal resistance, inverse head and shoulder formation, H4. No, this situation is not so interesting. So we're gonna check another instrument, which is Euro to Australian dollar. Daily chart starts first. That was a nice setup, this one. Unfortunately, I was not trading here. That was the shooting star which ended this correction and brought us a further drop. Fortunately for me, the price is too low to sell. There is a sell signal, obviously. The price should continue to go down, but for me, the price is too low to sell. And that was beautiful trading signal, especially that it was also a flag. Look at that. Here, last bounce on a breakout. In here, beautiful sell signal. Well, unfortunately, I didn't use it. Euro to Canadian dollar. How's the situation here? A bit more complicated. No trading signal. As you can see, when there is a nice pattern, I trade it. When there is no pattern, I don't trade it. And many traders, they force themselves to trade. Like, oh, euro dollar, it's a popular instrument, so I should find something. No, you shouldn't. You shouldn't force yourself to trade on euro dollar. You have so many other instruments that you don't have to force yourself to do anything. You can do whatever you want. That's the freedom in trading. Oh, this is a good one on euro to Swiss franc. We had this. We had this. We had bounce from the horizontal resistance. As this is a nice sell setup. This is a good selling opportunity on euro to Swiss franc. Not the best, not my type, but I have to be honest with the price action. Bounce from the horizontal resistance, breakout of the uptrend lines. According to the price action rules, that's a pretty clear sell signal. Next instrument, euro to British pound. Are unfortunately, so not the best occasion to trade. Resistance here, support here. Not my book. Euro to Japanese yen. Well, on yen we can see a strong reversal, kind of a V-shaped reversal, but which is potentially very strong and very dangerous for the sellers. But the price is still below important resistances, which makes it relatively safe. Euro dollar. On euro dollar, we are writing about this investment and shoulder formation. We will see if it will work out. There is this downtrend line here. As for the investment and shoulder formation, left shoulder, head, and the right shoulder. One thing is worrying though. Here is this. Is this. So a neckline. Yesterday a breakout of the neckline, which may be the false breakout. And actually after this we may experience a further drop. But we will see. As for now, the price is locked in a sideways trend from the end of May, from the 31st of May. As long as we are in a sideways trend, there is no trading signal here whatsoever. British pound, Australian dollar. Huge drop yesterday, reversal today. So a bit of a choppy movements. I don't like this kind of a situation when you have a strong reversal in a strong downtrend. It's not tradable according to safe price action rules. British pound to Canadian dollar is more flat. So here the curve may be reversing. And what we can see here is this downtrend line, right? Of that's a neckline of a triple bottom formation. So left shoulder head, first bottom, second bottom, third bottom. But also what we may be seeing here now, I'm gonna change the color, is the neckline of left shoulder. That's left shoulder. That's a head. I'm sorry, that's a head. And just before the breakout, possible breakout, we do have a small right shoulder. Price closing on a weekly highs. And price closing above this resistance will be a buy signal on British pound to Canadian dollar. That's without any doubts. Price getting here, strong buy signal on British pound to Canadian dollar. Let us see British pound to Swiss franc. Uptrend line broken. Also kind of a inverse head and shoulder formation, but this left shoulder is not convincing. So I would better stick to British pound to Canadian dollar, where the situation is more clear from the technical point of view. Next instrument, New Zealand dollar to Japanese yen. As you can see, I'm not sticking to majors. I'm just randomly scanning through the instruments, because on every instrument you can find something interesting. Sometimes, not always, as you can see. Here on New Zealand dollar to Japanese yen, what we had here is a beautiful false breakout pattern, and according to the price action rules, this should result in a further upswing. But that was a good occasion here. Unfortunately, that was a good occasion on Friday, and we should have traded on Friday, but I was on a medical leave and I was sick, so I didn't even open charts. As for now, it may be a bit too late. We are in a resistance like that, but a breakout of the red resistance will give us another buy signal. But it was a beautiful buying opportunity on Friday, like breakout, comeback, and this hammer on the H4 candle, which appeared at the early day on Friday of the European session. Well, that was very, very nice. So false breakout again, false breakout for the win. Maybe I will show you one more time, because on a daily chart, look at that, the price broke the horizontal support, which was with us since the end of 2016. And in theory, price closing here should give us a strong sell signal, but it got denied day after that. That is a false breakout pattern, so false breakout below a support, which is usually a very, very strong signal in the opposite direction. We almost got a bullish engulfing here. Well, the difference is small, but we can say it's a bullish engulfing. Usually gives us strong reversal, and it did here. Definitely a good setup. New Zealand dollar to American dollar reversal. This pair is doing really good because they had a flag. They failed to break the lower line of the flag. They broke the upper line of the flag, which actually cancels this flag and opens us way towards new highs. New highs, I mean, towards those from the middle of April. So New Zealand dollar is pretty strong. I would love to see this relation on Australian dollar to New Zealand dollar, which probably is bearish in the past, in the last few days. And you can see that we're going down from the top, from the 25th of May. The price is declining. But before we're gonna go there, we finished here New Zealand dollar to American dollar. So now American dollar to Canadian dollar. Sideways trend. Unfortunately, this sideways trend, which I don't like, and there is no trading signal here for me. Let's check if there is one on American dollar to Japanese yen. Unfortunately, well, so far there is not as well. What the price is doing is creating a right shoulder of the head and shoulder pattern, left shoulder, head and right shoulder. It may work out, but it may not as well. We are also bouncing from the horizontal resistance here. I think that as long as we stay below the red area, the sentiment is negative. A breakout of the red area can bring us a buy signal, but chances for that are now a bit limited. Support here. Breakout of the green area will green line will give us a strong sell signal. Australian dollar to Canadian dollar. What do we have here? First, daily chart. On a daily chart, you can see a reversal. Well, is it worth to use Fibos here? Yes, it is totally worth it. Why? Because they were respected since the very beginning. 23.6, 38.2, 23.6, 38.2, 50. So Fibos here are legitimate. What is legitimate here as well is support here, support here, support here, and a resistance here. Then look on H1. Well, most probably we'll have a reversal towards this area, and any bullish price action here in this green area will be a buy signal. Also, I think that this line should be helpful here. And we will see how the situation will develop. Yes. Next instrument, Australian dollar to Swiss franc. I hate this kind of setups. Copy movements. No, it's not tradable. Australian dollar to New Zealand dollar. Reversal, breakout of the downtrend line. The price starts to make higher highs and higher lows. Upswing, but also not very clean. Canadian dollar to Swiss franc. That's still this flag formation where we should see a further downswing in the next few months, let's say, or even years. For the more short-term traders, well, sorry, I do not see anything interesting. So Canadian dollar to Japanese yen, maybe there is something. But first look, and there is nothing, unfortunately. There will be a major sell signal once we'll break this support, because there will be a head and shoulder pattern. But as for now, we don't have anything interesting. And the last instrument I have for you is Euro to New Zealand dollar, where we do also have a sideways trend, pretty boring sideways trend, but we may be coming to an end of this sideways trend, because most recently we broke this the support on a daily chart. We do have also clear resistance here. I don't like this kind of movement, but well, traders had an occasion for triple bottom formation, but they failed, so now it's a penalty for the failure. We have this horizontal support, let's say. So I think that it may be pretty good deal to wait for the breakout of the lower green line, and once the price will get to this area, we'll have a strong sell signal. So this is my view on the market right now. We have some interesting trading setups waiting for us. We don't have any setups as we speak. For most of them, we have to wait. Maybe on Euro to Swiss franc there is a sell signal. For the rest, I think we have to wait. This one I can close. This one I can close. Yes, we don't have anything right now. Maybe tomorrow we'll try, we'll find something interesting. Well, we do have nice setups, but all of them are now for patient traders. Thanks very much for watching Daily Analytical Report. Now we'll have a short break, and after that a webinar about price action. Thanks very much and goodbye.